This is King World News. I'm Mary King, and you're about to hear a great interview with David Tice of the Federated Prudent Bear Fund. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have Bill Fleckenstein of Fleckenstein Capital, as well as Bill Lagner from Bearing Asset Management. Joining us now is David Tice from the Federated Prudent Bear Fund. David, last time we interviewed, you mentioned that the book value on the Dow was $3,150. Is it shocking to you that the stock market is above 10,000 with all of the underlying problems this country faces?
Yes, it is shocking, Eric. These things always take a long time to play out, and that's certainly the way it's been. There's a lot of hope and optimism. The government, the media really wants us to try to believe. We've had the first decline to 666 on the S&P. Now we've had the rally. It's not atypical to have 50 to 60% rally off the low. We're up about 70%. I think we've recouped about 45% of the prior decline. So this is not atypical. It's not something that we unexpected at Prudent Bear. We're trying to play it as intelligently as we can. However, the market's dramatically overvalued today. Things are really worse than they were prior. The stocks are at a higher level, and we're even more confident that this decline is so significant to come.
Is there any argument, David, that the Dow should be trading above book value at all? I mean, I realize the market and the pricing mechanisms have it at 10,000, but is there any argument that we should be above book value or around 3,000 or 4,000 today with all the underlying problems?
Well, there are all kind of arguments in terms of stocks sell at high prices for a while. Our point is at the end of a secular bear market, they will not bottom until we get to book value. That's where we believe we're headed. And we have horrible problems in terms of this financial system. We have experienced the biggest credit bubble in history, and we have so much excess capacity, especially in the consumer area, that stocks are going to have to go a lot lower. We're going to have to work off these excesses and imbalances that we created over the last couple of decades.
We keep having more money printing, and basically the idea is to stimulate the economy or maybe to loot in some cases. But how many dollars, David, just so I can get a handle on this, how many dollars of money printing does it take now to create a dollar of GDP growth?
Boy, that's a tough one, Eric. When you think about it, over the last 11 years, Bob Hoy did some work on this where we increased debt by about 113%. However, our employment number is back where it was in 1989, and we have 30 million additional workers, and we added this much debt. Today, we are adding, the investigator general from TARP is saying that the result of the bailouts, backstops, stimulus programs, et cetera, could exceed $23 trillion. Now, maybe we're getting a little bit of increased GDP. GDP is completely a number that's subject to so many estimates. It's really difficult to say if GDP is growing or not because there's a error rate of plus or minus 3 percentage points, according to John Williams, who I greatly respect. So I don't have a number for you, Eric, but I'll tell you one thing. The GDP growth generated relative to this trillions of dollars of debt is very, very anemic, and it's a much greater ratio than we've ever seen before.
Would you say it's above $5 or $6, even though you're not? It's hard to generate a number. I completely agree with you, but is it above maybe $5 or even $6?
I wouldn't be surprised if it's in the 10, 15, 20 range.
Then how sustainable is that?
It's not sustainable. And if you look at the fact that people will spend free money, as Chris Martenson has said, and so we've had cash for clunkers, we've had $6,000 home credit, et cetera. People are spending some of that money. They're spending money that we're giving them for unemployment benefits, et cetera. Our budget deficit's expected to be at least $1.5 trillion in 2009. There's a lot of talk about it being $1.5 trillion in 2010, just even from some of the bulls. Well, the same in 2010 versus 2009, that's creating no more stimulus. And therefore, there's zero impact on the economy if the budget deficit is incrementally no higher. And therefore, we are getting some bump in the economy from this year's stimulus. There's been reports that government spending amounts to 40% of GDP this year. However, if the spending's the same next year, there's no incremental growth, there's no incremental impact on the economy. So that just shows you that it is certainly unsustainable unless we go out and borrow and spend even more money next year.
When are we going to hit the wall, David, with regards to money printing to stimulate the economy?
Well, it's interesting about how quantitative easing, Bernanke has been talking about the end of Treasury purchases occurring in October of this year, and obviously we're there now. So has there been pressure applied from some of our foreign creditors for this? The question becomes when foreigners and other buyers also show up at these auctions, when they realize that so much of the purchases are being done by the Federal Reserve. And I think that might have been some of the rationale for talking about limiting future purchases, because eventually other buyers of these securities start to completely lose confidence in the currency if they feel like there's no other buyers and it's only the Fed that are printing money in order to create this artificial demand to buy these securities.
What about the funding crisis, then, that you have talked about, that you say is coming to the United States? What about that?
Well, what we expect, Eric, down the road is there will be a Treasury auction, and that there simply won't be enough bidders. Now, maybe that's when the Fed will step in and buy 60, 70, 80% of the auctions. It depends on how transparent all this is, if there's any backdoor games that have taken place where this is all hidden. But we do expect that there will simply not be enough buyers for a Treasury auction down the road. And when that happens, rates are going to have to go a lot higher. I'm not exactly sure of the details, how that might play out, but there will be a lot of fear in the market, and the result will be higher interest rates and a much lower dollar.
How far away is the funding crisis, in your opinion?
Well, it's really interesting that Bernanke's talked about ending quantitative easing for purchasing of treasuries, as I just said. And so we could be weeks away. The amount of funding requirements for treasury purchases is enormous. We have auctions going on several days a week these days, it seems. And we wouldn't be surprised if it is weeks away. Now, maybe we're wrong. Maybe quantitative easing is continued. Maybe it's done surreptitiously where it's not really discovered. There's several different options there. But we think that there are great risks of a funding crisis in the next few weeks.
Now, when you talk about, let's just say that it wasn't even a few weeks away. Let's say, David, as you said, best case scenario, we fumble along and we can go a little longer with this game, really. In reality, it's just a game of how long can we keep this thing rolling along. If the economy is struggling, really struggling, you're saying basically that there would be higher rates thrown into potentially an economy that's in trouble or even tremendous trouble, but that these higher rates will be forced into that economy potentially, or that's what would happen, correct?
Exactly.
So then what would be the result of that? Would that basically really trigger in or usher in the depression here?
Higher rates on a struggling economy will certainly impair the economy further, and we do believe that the economy is going to get a lot worse in the second leg down. We don't believe there's been that much growth in what we've seen so far out of these green shoots, other than people spending free money.
You hear a lot of people talking about 1966 to 82 and that stocks can just stay range-bound for a period of time or a long period of time, and the United States can work its way through this. In this situation, David, that's a false perception, is it not?
Well, the one argument that some people have, Eric, is that there will be inflation down the road, and therefore stocks represent a